Hey traders, what's up? Welcome to the Midweek Strategy Webinar with Jamie Saettele with SB Trade Desk. And let's jump right into the charts. All right, so we've got really no sense in spending too much time on the US dollar, is there? Considering that since Brexit, this thing has been more or less a disaster. I mean, when you look at this chart, does it not look like former support has become resistance? All these wicks. Uh, to me, this looks bearish. I mean, I've been, we coming into NFP, we had the idea that maybe we could get a little, a resolve or resolution from, from this range, right? And we could still get something like that, get a final push. Really, this is all one and the same with the euro, all right, which I'm going to look at now. And that is, euro, we kind of, we had Brexit and we came into the week following Brexit, which of course is right here, right? Looking for potentially a final leg into this 106 area. I'm not so sure that's going to happen anymore. I mean, look, euro hasn't done anything since Brexit. Even the good NFP number, I mean, it's kind of like Teflon as far as um, the trend is concerned. I mean, it won't get knocked down into Brexit. All I have heard for weeks since Brexit is that this is like the worst thing in the world for Europe, and Europe's breaking up, and blah 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 blah, and like, the euro's gonna crash next like lower. I mean, you name it, from bank research, whether it's Citi, Goldman, to guys retail, to things like Futures Magazine. Let's check this out. So Futures Magazine, they just sent out an article today. Futures Magazine. Let's see, futuresmag.com. So they had an article come up today about the, where was this? I don't know, something about the euro and how it's about to take its next leg lower. Anyway, I do not see it on here, but it just came out. Anyway, it was from an analyst at like forex.com or something. So whatever. My point is, I haven't seen like a bullish argument for the euro. I just haven't seen one, and typically this is a sign of consensus. No, I mean, everyone seems so bearish the euro, and it just won't go down. So we'll see. I mean, the SSI is another thing. If you follow that FXCM, the SSI, it's relatively, it's still, you know, negative. I mean, people are just staying short. They've stayed short for weeks and weeks and weeks. They turned long euro on this Brexit decline. Then right away they were short again. They were long for like an hour. Okay. As this continues to go higher, they're going to continue to get shorter. So I tweeted out a chart here just recently, and if we can break through this area, right, that would be a good sign. I mean, that's kind of been resistance post Brexit. So if we can get through here, that would be, an indication, I think, that maybe euro is actually, maybe there's something there, right? Slope-wise, probably be looking at something like this. Okay, you can see, resistance on the median line, right? Median line, very subtle here, but you can see how you're getting higher floor, right? This is the week open, by the way. You can see there, 110.45. That's where support came in last night during European hours. So, what we've got here is potentially the building blocks for a bigger move higher. And if we were to break out through this region, say 1135 or so is kind of where where resistance looks like it may be. If we can break through that region, okay, and continue higher, maybe into 112 or so, what you'd be looking for is for this median line to provide support on the pullback, and that to me would be a long entry. All right. Maybe 1140, 1040 or so stop. And, considering that the world seems extraordinarily bearish, you could get really quite a strong move higher quickly from euro. So that's kind of what I'm thinking as far as euro is concerned. It's a lonely place to be kind of bullish euro right now, but usually the lonely place is the right place, right? So that's what we're looking at. All right, so that's euro for you for now. Let's move on to, I guess we'll look at pound. I mean, look, it's, you got BOE tomorrow. Pound came up into, this is a 50-minute chart, but here's the 60-minute chart. Pound came up, we'd highlighted in the swing update, just a couple days ago, the importance of kind of the 133 area. And sure enough, last night, it was during Asia, it had some active Asia sessions, of course, given what's going on with, with the yen and everything else, and the yuan, China back in the mix as always. But cable really kind of shot up into 33 last night. So that's the first real resistance area. I think that if you are getting a broader bottom of sorts, then this 131.17 area is about as good a place as any for support. So, if you're looking at this, I have a pound long. It's like a really long-term kind of idea. I just kind of was buying it into the long, like the monthly chart. Sometimes, by the way, the best way to trade is to actually look at, have a monthly chart up at the time, because you won't get emotional about it. Makes it easier to pull the trigger. Anyway, so that 128, we're holding it. It's obviously major. I think before all is said and done, you could very well get a squeeze, back into this 135, 137, I guess it's more like 136.80 region. I have a feeling we're probably going to go through a period of trading between, roughly these lows down here and this 35, 37 area, right? Not too sure about, potential for like a V bottom. Also not too sure about the potential for a full-on break and total crash. Okay, there's a lot here, and we've, responded to it, obviously. So good to keep that long-term picture in mind. As I look at the short-term picture, again, 31.17 or so for that support region, kind of fighting the month, I guess you'd say, if you're trying to be long into, the month open and whatnot. And then of course, 29, 27.45, which is daily reversal support, as well as the weekly open would be your final kind of support before the lows. Very much a work in progress as far as a definable swing and entry, but as far as near-term levels are concerned, 31.17 does look pretty good, right? So pay attention to that. Here's the 15-minute chart. You can see this. Actually, you've got another, this is super short term, of course, but you've got a nice looking slope here on the downside that the market's kind of trading around. And so, who knows, maybe we trade into this at some point towards the end of this webinar and get a bounce. 31, again, 31.20 or so down here, looking like you might have resistance up at 32.30, which actually is in line with, was at the overnight floor, Asia and Europe lows right there. So, if you feel like trading pound for the next 2 hours, I would watch 31.20 and 32.20 as levels. Moving on to Aussie. Okay, so Aussie, it's been a good performer, but it's been pretty choppy, but it's talk about Teflon, this thing's brushed off everything, right? So Brexit, gap down after Brexit. Our entry was on this, ended up being right here on this spike. Election uncertainty, no problem. Slammed lower after that, rebound. You had this was the downgrade of the Australian outlook from stable to negative. No problem there. NFPs, super strong, no problem there. And here we are. So at this point, you say, well, why wouldn't you raise the stop maybe on on this trade to 75 or something. Well, so you do have tonight, there is employment data in Australia, and you do risk kind of getting taken out on a spike. You guys can see all this stuff, right? I haven't really got any comments yet. Can you guys hear me? I hope I'm not talking. Okay, good. Usually there's some comments, but I got nervous for a second. All right, so as it pertains to Aussie, okay, moving on, Aussie. Let's go to the dailies. All right. As you know, we are coming into a significant, hold on for 1 second. We are coming into potential resistance up in the 77 to two levels, daily reversal and weekly reversal. 77, 37 is daily reversal resistance. Again, that's just the highest day of the move, which is 421, and the close of that day is 77.37. Okay, then you've got weekly reversal, which would be the Friday of that week. So the week's close, which is 77.08. Okay, you remember this day here, that was the May 3rd high, that is 77.18. And then, of course, there is a host of slope stuff up here, okay? So I have a target on this long position right now at 77.15. You could get higher, but, as we get into the top of the range, I'm not like trying to be, perfect on this, on an exit. Either get trailed out or you get taken out towards the range highs and, this zone of resistance that we're looking at up here. Now, begs the question, I guess, look, I'm not sure if Aussie has, I'm kind of torn on the fact of whether or not the big big move has turned is like Aussie, are we in a third wave or a C wave, right? That could end up going up, as high as, 87, okay? Which would be the next major resistance level. I would look at 8150, 2 legs up, okay, which is also the May 2015 high. I would look at that level as kind of an interim level, right? You could certainly sell off from that level, but I would look at 87 if we broke out of this as the next real big level, right? And here's why. I mean, just perfect. Okay, the slope that you get on this, right here, big behavior change, former, support, or finding support at what was once support, and then what became resistance. Okay, and then this level here is no slouch, right? Because if you get through this thing, which has rejected just every move higher over the last, year and a half since January 2015, you get above there, then it gets, I mean, you could see real upside acceleration. It's a lot of people forget when you break a range, you expand a range. That's just as significant, if not, well, it's probably a more significant technical event, and can be more profitable or costly to you if you fade it than if you were, trading, off that resistance, right? So just because we point out that there's some big resistance or whatever coming up, it does not mean that it has to hold it. So we're coming up in this big resistance. I don't necessarily wish to buy into that resistance. Rather, I'd look to get out of these longs. But market takes that out, it's off to the races again, okay? So looking at Aussie, kind of thinking ahead a little bit, in working here's the gold analog, right? So remember, we've got this thing. If this is confusing, check out the long-term page. Description of that there. Or no, sorry, it's in Sunday's update, the SB swing update. But what we're looking at here is gold basically move forward. Okay, so if you take gold price action from the low and you move it forward to this point, this is where Aussie bottomed. What you end up with at times is a pretty good analog, right? And it was out of sorts or out of favor for a while until Brexit. And it's funny how that happens, right? Sometimes these big market moving events, these big shock events, actually end up bringing an end to some correlations, and they bring other correlations back into play. And in this case, that seems to be what's happening, because since then, as you can see, Aussie's followed gold from a month ago really, really close. It does suggest that we are due for a top and pullback. Okay, so if we do get a top and pullback, whether it's from here or preferably, obviously, from above 77, I'd probably be looking for support at the Brexit close, okay, which is right here, which is 74.65. Okay, so the close from that day. And again, why? Because that's a high volume day. Okay, so if I put up the high volume day, or the volume, you can see here, we've got the Brexit day, the close of that day is basically a level that you should be looking at to provide support now. Okay, and it is 74.65 on spot. You can even see, like, so this was the rate cut day, right, back on May 3rd, and that the close for that day, for example, was actually resistance here on June 9th, right? So that's what we're looking at as far as we're concerned with Aussie. This is on balance volume. Be interesting if we can make new highs in volume on balance volume. That would actually be a good sign for a pending breakout. Typically, volume will precede price. Okay, so that is Aussie. After, I said a lot there, but the big thing to know is that, 77, you know, basically all 77 handle is kind of a big area of resistance, and eventually 74.65 might be in play. But if you break out, it could be, super significant, moving higher. All right, moving on to Kiwi. Quite flummoxed, I guess you'd say, by Kiwi. I mean, after we turned down here, right? I mean, it was a perfect turn down on June 24th. The only thing that was going against this was seasonality. That's another thing too, by the way, is Aussie and Kiwi seasonality does turn down after this week. It's kind of commodity in general. Crude oil turns down after this week. Aussie and Kiwi turn down after this week. Dollar CAD is good upside potential after this week. Okay, so there is a shift historically, for whatever reason, in the middle of July. Okay, right? You have some big shifts that take place over the course of a year. They tend to be on a quarterly basis, but in this case, the natural shift does take place towards commodity weakness, which would, also commodity currencies towards the middle of July. But so here's Kiwi after this turn down with Brexit. Even though it was Brexit, always very wary of kind of news event stuff. But I did think, I was of the mind that was an important top as we were kind of counting these waves. But that goes to show you too that it doesn't really matter how, about getting it completely, right. It's not about forecasting. It's not about predicting. It's about trading. If your methods are okay, then you'll be fine. In this case, didn't really end up shorting it, right? Because we didn't get the response that we were looking for, right? We wanted to see a good rebound into resistance and the market come off in a proper way. It did not do that. So here we are at this point, again, probably thinking that, well, this is the trend line to watch. And I would pay attention to 73.90s. Okay. That's the first area. There's, 74.60 I've written about, but 73.90 is also a spot to pay attention to. Reason being is that 73.90, you can see here, you got the high from May 22nd at that point. It's also the low here from April of 2015, April 1st of 2015. So kind of the first area again, certainly a work in progress. Christian Kerr, who's writing some guest pieces actually for us, if you're familiar with who he is, super bright, intelligent guy, knows his stuff, has been around the block, traded for hedge funds. I mean, you name it, guy's done it all. And he's got some big cyclical stuff going on with Kiwi into the second half of the month, which fits really well with the seasonality turning down actually in the second half of July anyway, and the price levels, et cetera, et cetera. So getting close, in stock mode, if you will, maybe not quite stock mode, but getting close to being in stock mode for a turn lower. I do think this does turn lower some point pretty sharply. Would maybe fit well with Aussie coming off a little bit, but maybe not as hard as you get a bump up higher and a bottoming process in Aussie Kiwi. So that's what I'm looking at there. On the near term, you're still obviously trading through this slope quite well, right? You can see here, I mean, this is the 240-minute chart, it just rip, dip, support again, right? Finding support above the low actually here just this morning or last night. I mean, it's really following it pretty well. So, if you start to see behavior changes on this, like we start to break some of these levels and come back and test them as resistance, that would then, change the picture. And at that point, maybe you think about putting a short position on. But until then, you kind of have to hold out, I think, for, uncle levels, right? Like 73.90. Okay, dollar CAD still thinking higher. This is the same chart from last night. The swings within the triangle. Again, not sure if it's bullish or bearish. I'm kind of leaning towards the idea, as you know, I have leaned towards the idea that this is going to break out to the upside. One reason is the crude, the crude levels. Okay. We've got All right. Excuse me. Hold on. Okay. One reason is the crude levels. Um, okay. Again, crude came up, as you remember, the famous, Gartman proclamation here on CNBC, the ultimate momentum trade. We all know how that worked out. Since then, I did write about a potential for a false break down. We did get that at this point. It was a false breakdown, as yesterday was a rip higher, but today it's almost completely retraced. So it might end up being a real breakdown, right? But what you've got here is the failure at a really big level. I was talking with Mike this morning about crude oil, and I was saying, he's like, "What do you think here?" And I said, "Look, man," I was like, I don't really. I'm kind of like neutral right here. Like I don't want to be anything. This again, the seasonals turn around after 2 more days. So like I'd like to go into next week and get bearish, right? Um, I kind of worried that you kind of get chopped up here with crude oil, as well. The last 2 days have certainly done that, but I wouldn't kind of take a super strong stance on crude oil at this point. What I'd do is maybe it breaks down a little bit here, okay, and then maybe you look to come in next week and crude oil is, kind of in sell mode, right? So a little breakdown here, a little rebound into the old support, and then get bearish for, next week and in the coming weeks beyond that for a big drop, okay? And that certainly would fit quite well as far, this turn lower, this breakdown in crude oil would certainly fit quite well with, getting resolution from this dollar CAD on the upside, right? And when we look at dollar CAD on this long-term basis, I mean, look, I think that you probably had a huge top up here, right? Like, I mean, this is like a top that lasts for, years and years and years. But we've come off a really big level too. These are median lines, okay, by the way. And you could certainly we could be trading between them. We, have consolidated now for a number of months. But remember, up here is the year open, and the 618 of this move is up at the 138 area, right? And so when I look at the daily chart, and again, there's the 618 year open. There's the median line on this daily. When I look at this, and I'm like, where that relationship ends up? 138.30, 1618. I mean, I go to bed dreaming of 138 at night. Like I can't get it out of my head. Okay, 138 dollar CAD. So yeah, I want to be long dollar CAD because I think it goes to 138. Question is, where do I get long? Where's the stop? Well, this is about as good a spot as any. We came into the 20-day average today, right? Month open, weekly reversal level 2906. You got a low at 2910. Stopping point maybe 134. So looking at the near-term picture, if dollar CAD can get a little bump up here, I think it's probably worth buying it, or at least putting an order. You want to see the market turn down here. This is CAD futures, by the way. So that would mean dollar CAD turning up. This is, by the way, the highest volume level in 1 hour that you've had. Huge volume levels tend to be huge inflection points, okay? And this was the most volume we've had in 1 hour, going all the way back to the day of the low in CAD, which is high in dollar CAD. I'd say that's a pretty big inflection point, okay? So this is a massive reference point, a very important one, and it's not inconceivable that dollar CAD actually ends up trading higher from here while staying above, this candle, which for CAD futures is below this candle's high. So if I go to a 60-minute here, $29.83 is the spot price for that volume. So what you want to see is the market kind of come up here, right? Make a nice little push higher. and then you look, and then just put an order to buy it at 29.80, stop below 29.30. Okay, that's what I would be looking at as far as a dollar CAD entry. That's the plan. So, otherwise, if we just continue to drift lower, say we drift in here tonight, then, you could end up getting a support at 29.06, 29.75 is a level, right? 29.75 is the low down here from last week. What's that? 7.7. Sliding parallel off this level actually intersects it tomorrow. So that could be an interesting spot too. But yeah, basically with the crude oil and the seasonality and this coil triangle and the 20-day average and the levels and everything else, I really like the long side in dollar CAD, right? And considering that euro doesn't look like it's super bearish either, who knows? Maybe euro CAD's a really good option on the long side too. Personally, with right now, I prefer to kind of stick with the different dollar pairs, because what if I get it totally wrong? And that way, maybe euro does break down and maybe you get it totally wrong. But rather than doing that, you end up having different dollar positions on different sides, and hopefully you end up, one of them ends up running and you do well. So that's how I'm approaching it right now. Okay. Okay, yen time. So let's go over what yesterday, what was written. Let's go over what was written yesterday. All right. Okay. So this is the weekly chart of dollar yen. This is the chart you saw last night, or one of them. And simple stuff here. What you've got is a 52-week average in black, okay? Now, this is, I'm sure there's different names for it. I've always called it the disparity index, but what you're showing here is just graphically on the bottom of the chart, the distance in percentage, okay, that a market is, or an asset or anything, the distance it is from its 52-week average. I mean, you can do this with anything. Obviously, the longer term average you look out, the better it's going to cycle, right? Because if you go 20-day average or something, extremes might be in the beginning of the move more often than not, actually. As you go longer out, right? I mean, at the end of the day, these markets are cyclical, okay? And they do oscillate, maybe not between fixed prices, so to speak, but maybe between major swings and percentages above and below a certain mean. And a 52-week average is a pretty good long-term mean. I mean, it's just a year's average, right? So as you get, extremely overbought, you'll be many percentage, a large percentage above that. As you get extremely oversold, you'll be a large percentage below the average. And it does appear to be like, 13 to 15 or so percent is a pretty big level for dollar yen below its 52-week average. I mean, graphically, these are all the blue dots represent when the average or when price is 13% below it. In all instances, the market actually traded back to the 52-week average, right? It took various times, obviously. Okay, in the last 3 instances, it was actually resistance again, more or less, on the way to lower levels. Okay, this one would have been tricky. Okay, back in 1991, from the 1995 low. I mean, you just went straight higher, and it was a multi-year uptrend. And then, of course, in 1988, tricky as well. You went through and then went lower to new low, made a double bottom. But what I'm getting at here is that the market, if history is to kind of rhyme, if you will, we're going to trade back to the 52-week average, okay? That might be, it depends on how long it takes, but, it could be back towards 110 or 112, more than likely, because the average is going to decline as you go forward in time. But that was the logic for comparing these different time series, right? Going back and looking at the 1999 low, looking at the 2008 low, and December 2008 low, okay? March, April 2008, and then December 2008. So that's why I didn't just pick these figures out of the blue, right? These times out of the blue. We're looking at specific times. So if we look at those times, compare those price movements. What we have is right here, okay? Now, the shortest one of these three actually ended in October, or would take us to October. The longest would take us out to December as far as corrections, are concerned, or upsides concerned. But as you can see, I mean, they take very different paths, obviously, but for the most part, the beginning are pretty similar, right? And that is, thrust higher, more or less sideways, okay, for a number of days into 720 to 722, which would actually put us next Wednesday to next Friday, and then you get another surge higher, right? That's when it really starts, a surge higher in the 27th or 28th, and then you get a dip. So for me, there's obviously multiple ways to play this. The way to play it right now is I'm trying to do is to look to get on board basically the move that you're going to see up to here, right? Because we're right here now, right here now, okay? So you could get a dip, for the next day or two and sideways, basically for the next week before you go higher. So that's what I'm trying to play for, is basically erring on the side of buying, understanding that you could go sideways for a week or so, but that you are going to go higher towards the end of the month. And I'm liking it through euro yen rather than dollar yen, talking about the euro charts, and the euro yen chart just looks cleaner. I'll get to that in a second. All right. So, comparing all these levels, because they all are consistent in the difference in there between the 52-week average. All right. And they all look, they all share a similar shape. Okay, as far as the price is concerned and the price movement's concerned. So, it reckons, wouldn't be crazy to think that we get something similar here, is all I'm saying. So that's what we're looking at as far as the yen. Now looking at the price chart, if I just look at this price chart, the level that sticks out to me is 102.14, which is the Brexit day close. That's the big volume level on the daily chart. That would be quite a move lower from here, obviously. It's not impossible. It would be a deeper correction than expected, put it that way. But it is kind of like the invalidation. Like if you were to go below here, I don't think that dollar yen is worth pursuing on the long side, okay? But other than that, I don't have a whole lot to really look at with dollar yen. Like the big resistance to pay attention to is 105.54, right? Or you get 105.20 50s, right? You've got the low from May of 2016, and then go across the chart. You got the low from October of 2014 at 105.19, then the high up here from January of 2014 at 105.43. So big area as far as low to mid 105s are concerned. Okay. And given the analogs suggesting that you can kind of go sideways for a bit, then you might actually consider range trading between this area, and down here. I think that support probably ends up holding closer to 103, 10, 103.50, right? You get the month open, you got these former lows, back in June before Brexit, and then the high, post-recovery high Brexit. So, this area could be kind of a range area, okay? Now, euro yen, to me, looks better. Several reasons for that. One is this chart. This was in the Sunday update, but this is a good looking chart. I mean, this is a long-term chart, okay? It is possible that you actually have a first wave up and a three-wave second wave down, and that Brexit just made the biggest low, that we'll see in a long, long, long time. And look at the horizontal levels on here. Significant inflection points going back 2+ decades. It's 1995. Okay, so you've got, really a significant support level underneath this. So, when I say I'm looking towards 121 in the near term, that really in the scope of this chart, that it doesn't mean a whole lot. I mean, you could get a lot higher than that. But I think 121 would be kind of a stopping point. It's the former congestion lows. So moving on to the daily chart, right? You can see the line here, downward sloping, September 2015. It goes off 2 levels in February, March 1st, 616. I thought that was the low. Ended up obviously not being the low. You got Brexit after that. And then, we're looking for this line to act as support. And we've got the 114.49. I have the entry at 53. It doesn't look like it's going to hit today. I was hoping it would get hit overnight. Did not. So you might be able to get a little lower. You might be able to get 114.19, 114.20. That's the level I'm looking to buy. It's basically this line right here, okay, which has been very precise support. So you can see we're working in from the really long-term charts and looking to take advantage of an entry on a short-term chart, all based on slope, the premise of slope, and of course sentiment, right? If I go to the swing updates, we talked about this Economist cover, right? The Italian job, right? The Economist, you got to know how to read these covers. Europe's next crisis, okay? Well, I guess the Economist was not familiar with what happens or what's already happened to the European financials, okay? Going back here now to June of 2014, I do see a 1, 2, a 3, a 4, and a 5, and more or less the low of a price range. So combine that with, a cover, a magazine cover, and you have the ingredients for really a big, big, big low, okay? Once it becomes mainstream type of story, it's usually pretty close to done. In this case, they pretty much bottom ticked it with that article, didn't they? So again, this was the reason we wanted to look at buying euro yen as we came into this week. Really didn't have anything. I mean, obviously Japan came out and they jacked the yen, of course, but had nothing to do with that. We were looking at this and saying, well, what correlates with that? How's the way to play that? Well, the way to play that is through euro yen, because it's basically it's the same thing, right? Tracks it very well. So, as this recovers, euro yen recovers, you'll see the European financials, ETF, Italian banks, et cetera, all these things will recover, and eventually, you'll have everyone saved, and then it'll go down again. But that's what we're looking at with euro yen specifically as far as a trade's concerned, okay? And here's the 240-minute chart. Same thing, right? This is the line right here. Okay. Do think you could get resistance up here, 116.80, maybe 117.30. Again, I think the big moves higher. I wouldn't necessarily want to be shorting this. I'd rather be a buyer of weakness into this region. So, maybe tonight, maybe during European hours tonight. I don't know. We'll see. BOE tonight, or tomorrow morning. So maybe, I don't know. Maybe they do something crazy and markets freak out. And on that note, why don't we look at the S&Ps? Really the first time in ages that I can say the S&Ps are somewhat clean. So this is the chart we've been looking at for a while now. Basically July 2016, right? Equal time and distance from July of 98, July of 2007, July of 2016. Crisis, coming crisis, right? Crisis here was Russian default in August. Shit didn't really smell right in July that year. You had the first ripples of the financial crisis, although not many people really knew what was gonna, what could happen or go on. But really, that really kind of started in July of 2007. You had Bear Stearns, I think, close a bunch of funds back then. Back here in August of 2007, you went back and retested the highs, went to slight new highs, and then the market, obviously, the rest is history there. And here we are now. And if I think about what the next crisis might be, I don't know. It's kind of tough not to think it could be something with the bond market. We've got insanity going on in the world as far as the, trillions of negative yielding bonds are concerned. Can't end well. The question is the timing of it. When does everyone kind of start to realize that something's wrong? So that's why I have a question, something with bonds, I don't know. It'll probably be something where it's not going to be like, boom, here we go. It'll be a process, right? You go up to the highs, market turns over, bear markets kind of unleash truth, and no one will really understand what's going on for a while, and then it'll become obvious, and then you'll be in the middle of it. Okay, so this isn't something that's going to take, a week or some months. This is going to take a long time. My point is, be ready for this area 2200 as a big resistance point in the marketplace. Okay, so going to the short-term chart. This is the futures chart. I know last night I showed a couple charts, right? We showed this is the futures chart. Also showed, of course, the CFD chart. And so if you're confused about what that, the difference, well, so future is the contract, okay? As you get closer to expiration, okay, you're going to have the futures chart will come in line with the index chart. And for the most part, the CFD is the index chart, okay? The cash chart, right? The S&P index, for example, right now, if I pull up S&P index, the current price on the S&P index is 2151.60, okay? If I pull up the CFD, you can see it's 2152.10, pretty much the same thing, right? It's like half a point difference right now. But if I look at the futures chart, it's currently 2145.75, okay, moves in quarters. So for those of us in the US that don't or can't trade CFDs, okay, we need to trade futures. And as you get into a new, a new contract, you'll have a big discount on futures to cash. And as you get towards the end of that contract, they come in line. All right. So what we have now is a discount of like 6 points or so. And that's why the numbers are a little different. Obviously, the lines and stuff are pretty much the same here. So we do have some really clean looking slope for the first time in a very long time to follow on the S&Ps. So again, as you know, I think that you end up at 2200 before you really start to see problems. But you might actually end up trading between these things on the way to 2200. So maybe you get up here and you come back, So I mean, it could be quite a ride of back and forth into 2200 if that's indeed where we're going. So as a trader, what I'm paying attention to and what I, would suggest you pay attention to is basically just these two levels. I mean, really. So let's look at the CFD chart. That might be what you're looking at. I'm not sure, but here you go. Okay. Boom, 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 boom. And what we've got here is a long-term slope. Let's put another long-term slope on there. So what I want to do is put this one on there. Okay. Get rid of that, that. Okay. All right, so there's that line here. It would be interesting if we end up actually trading if we trade through these things for a while, you could end up at 2200 with an intersection maybe towards the end of the month. I don't know. We'll see. Not trying to predict it, just trying to get a sense of where the market's going to react and not react. And, this level is about as good as any as far as a reaction, don't you say? And then, of course, you've got the median line and slope, which cuts through this stuff, which intersects with kind of the breakout level highs. So you've got a nice horizontal slope deal going on there. And that's about it. So that's where I'd be looking. Finally, I'm actually working, I'll publish this later for you guys and gals, but I'm working on just doing a quick study here on the Dow. And there have been some studies that have come out the last few days from various, you might have seen it on Twitter or StockTwits or something about, the number of days between the new 52-week high in the Dow and the new 52-week high in the S&P, and it's been, so long, X amount of days since we've done that, and, what it means going forward and everything. So sounds interesting. So I want to get, I'm never one to trust anything or anyone. So I figured that I'd make that study myself. And this is kind of what it looks like. So what we have is 59 weeks between 52-week highs. Okay, and again, I'm going on closing prices. I want closing prices for this. I'm not, I don't want spikes and everything else in there. So I want the agreed upon price at the end of the week. And we have 59 weeks between the last 52-week high closing price and last week's closing price, which was a new 52-week high. So how many times have we had that amount of time between 52-week highs? And it turns out there have been 16 instances, okay? The most recent being September of 2009, which was the first 52-week high since, of course, the top back in October 2007. So you get the idea. Okay, so 59, we had a much larger number then. It was 100. The last bear market you had in the tech bubble, post-tech bubble, the new high is about 108. So you can see there, see, what I'm saying. So, these 52-week highs, the idea being what happens, say 4 weeks later, maybe a quarter later, 13 weeks later, 12, 13 weeks later, 26 weeks later, and a year later. Basically, I want to know if, what's being presented, which is that it's really bullish, if it indeed is the case, and in what instances was it not bullish, right? So that's what we're looking at, okay? So I'll get, I'll have those figures out for you, and, for, if anything, should be interesting. Final thought, at least on the stock market and so-called risk trades and everything else, is we've got the new highs in the S&P and the Dow, and we don't have that so far in the Russell. Now this is the Russell ETF, Russell small cap stocks, and what you've got, is things lagging pretty badly, to be honest. I mean, it is a three-wave decline, okay, but we're nowhere near the high, so to me, it's kind of a warning sign, I guess, to watch out for resistance up here, a little higher, but just point that out. But yeah, after all is kind of said and done here, it does look like that the market can eke out a little more, 2200. We're 2150s right now, 2150. So if that's the case, pullbacks into 2020 or so actually might be bullish opportunities, which if we got our stuff right with the yen, could help out there as well. You could get some good classic risk on type of behavior from some of these yen crosses coming off these huge lows. Again, dollar yen 13-week below its 52-week average. So that is that. Any questions? I think I've pretty much covered everything that I wanted to look at. Pete says, so do you believe a major correction is coming in the coming weeks? No. I mean, I just talked about going to 2200. And so, yeah, I mean, so I'm not sure. I think we're on different time frames here. Pete, so here's what I'm saying. Here's your chart of the S&P. All right. This is a short-term chart. I don't know what you define as a correction, but you have to look higher in the S&P. You don't buy it blindly. Okay. In fact, you might even want to short it. Okay, but 2170s area looks like resistance for me on a trader. 2127, 2120s looks like support. I think you're constructive, the S&Ps, until it gets to 2200. Okay? Once it gets to 2200, see what happens. All right? And then you are talking about the S&P, right? Pete asked about, do you believe a major correction is coming? So, yes, okay. So I think that you get a top. I'm looking for a top at 2200. Okay. And then it would make sense if you got something this month, quite simply based on the cycles of something crazy happening in tops in July. Okay, that's all. So that's my deal as far as the S&P is concerned. But again, July, what are we in we got 2.5 weeks left in July. So I guess if I had to give a forecast or something, I would say that you could trade between 2120 and 2200 for the rest of this month, and then we'll see how the month ends. But bearish scenario would be something like where you trade up to 2200 and then you sell off really hard from it, and you end the month say below where you started it and get a key reversal month. That would be kind of a nasty. A nasty way to start, or a good way to start a bear market. All right. Okay, super. Well, I'm going to wrap it up. Doesn't look like there's too much else going on as far as questions are concerned at this point. So I'm going to end it there. Get this archived for everyone, and you can watch it again. Kind of if you're late to the show, we went through kind of dollar pairs, and then towards the end, kind of got into the equity indices, S&P 500 mainly, and working on that Dow study that I'll get to you. And other than that, wrapping up. Have a great rest of your week. Again, BOE tomorrow. Not sure if there's fireworks or not. I'm actually watching for support here on this cable chart. You can see it right here, about 20 or so pips below where we are, about 31.20. We're 31.60s right now. So kind of what I'm watching probably for the rest of the day. All right. Okay. So everyone, thanks again for attending, and have a good rest of your week. All right.